Pei-fu, hi. Good to have you with us. How have you been?
Hello, Ashu. Good to see you again. Been very good. Thank you.
Pei-fu, this is an exciting conversation, right? I think there is a huge excitement which is there around credit cards. We've seen it graduate, right? I mean, it started from lending. There was a huge conversation around wealth tech. There's a lot of conversation which has been happening around, instruments, right, of investments. And now I think within the lending space as a subset, right? I think credit card is something which has become so much more interesting and exciting, right? And I think everybody's kind of talking about this. So
Right.
this becomes an exciting conversation, right? Given with what you guys are doing, a very unique offering, right? Especially specifically focusing towards corporates, right? I think which is a segment served and underserved at the same time. I think which has not necessarily been very clear about their requirements. I think you're essentially evangelizing the cause, trying to make a lot more clear proposition, right?
Right.
And I think also helping them break it down at a functional level, right? Which just makes it a very interesting positioning as a card, right? So thus the conversation is exciting, right? I'm looking forward to this conversation.
Yes, same here.
Before we dive into the conversation, right? I mean, before we start talking about Carbon Cards, right? And all the good things that you've done in the recent past, right? It'll be interesting to have a quick run through of your career, right?
Sure.
I think it'll be an interesting start to have your introduction.
Sure. So, previously I spent some time with McKinsey, built some companies with Rocket Internet,
Right.
and spent about 10 years doing venture investing. So was with Kleiner Perkins in China back in 2006.
Right.
And I was investing in tech company in China. And right before Carbon, I was actually investing in India,
Right.
mostly fintech. That was back in 2016 to 2019. So me and my co-founder Amit, he was with me at the VC fund. We're both looking at a lot of companies in India, startups, fintechs, and that's how we got to how I got to know about our India and the amazing opportunities that last year. So after around April 2019. Me and Mit felt that the startups and SMEs are seriously underserved by banks in terms of corporate credit card.
Right.
Because as you can understand, India is a credit-starved country. It is not easy. It's still not easy for companies to apply for a corporate credit card.
Right.
Banks typically ask for fixed deposits of 110%. They will ask personal guarantees. They'll ask for a lot of documentation that take you months to get the card issued. And we learned about how other countries, say in the US or Europe, are able to issue the card quite quickly and provide a product that really meets the needs of the startups. And given that we're in a startup, we were talking to startups all the time. We would ask them, how are you applying? How did you get your card? And they would give us a lot of horror stories of the experiences of getting a card in India. So we thought it's a huge challenge, but also great opportunity because the pain points are so real and so close to us.
Right.
And so we decided to lead that VC fund and then build Carbon with our co-founders back in April and May 2019. So that's kind of the story of how we started, because we wanted to solve the problems for startups and SMEs.
Very interesting. Pei-fu, I think when you talk to people about SMEs, MSMEs, large corporates, right? I think that's large corporates is typically something which is served well, right? I think it's one of the key priority area of every banking institution, right? And there are tens of solutions that are out there, which banking institutions are out there to sort of service large corporates, right? But SMEs, like you kind of highlighted, alluded to in your point, right, have been extremely underserved, right? But one thing which is extremely common, right, is that everybody talks of SMEs, right? Everybody's excited about the SME opportunity in India, right? It's a fairly large market, right? But there's so much little work which has essentially happened to cater to them, right? There's very little customization which has happened, right? I mean, when you look at the market, right? How do you size this market, right? For you, for example, right? When you've conceived of Carbon Credit Card, right? For example, a tool which is very critical, right? A business tool which is very critical. How do you size this market, right? I mean, when you look at the maturity in the market, right? How would you size it, right? Saying, what are the qualifying parameters for some of these SMEs to get to that point where they will, what will the number like, right? On the parameters that you set.
Right. So it's a very tough question because I think we're still in the midst of an evolution.
Right.
I mean, a revolution in the sense that, there are 40 million plus SMEs in India.
Right.
And most of them actually do not use cards because they're more cash oriented and do not have a need for card. But if you think about COVID and the push for digitalization, more and more companies will be spending online now, whether they would pay through bank transfers or they pay through cards. And I believe the various services by the e-commerce merchants or let's say infrastructure, SaaS, these services will naturally eventually be part of what's needed for these SMEs to become digitized. And when that happens, then the need for card will naturally rise. Now, I would say the way I look at sizing is right now is that we're in the infancy stage in the sense that most companies are not using cards. That's one thing. Of the companies that are using cards, they're usually using personal cards because it's easier to get a personal card. So a lot of entrepreneurs, as you know, that the founders simply use their own personal card, swipe it, and at the end of the month, they're reimbursed from the company, And that is because it's easy, and it's because it's difficult. On the other hand, it's difficult for them to get a corporate card from banks. So I would say that this market is growing very fast. As we make corporate cards available to these SMEs in India, then more and more of them will adopt them, because I don't think anybody wants to mingle their personal finances with the corporate expenses. Everyone wants to have their personal finances for only their personal expenses and have company expenses, because sometimes your team member will be like, hey, can I borrow your card because I have to pay for this expense, and it becomes very messy at the end of the month. And we think this is something that is quite the natural path forward. That every company should have a corporate card to ensure that all their expenses in the company goes through under this card. Now back to the question about sizing, I would say that we are definitely going after the companies that are using cards, say the startups and the SMEs that use cards. I would say that there's still a large number of SMEs that are currently not using cards that we believe will be using cards very soon. So we're basically growing with this market. It is not a stagnant snapshot at this moment.
I can understand where you're coming from, and I think India is a market with many complexities, and I think we'll talk about that as we go along, But no, I understand where you're coming from, And I think startups are clearly in a better position. I think they have a very clear visualization, And I think they understand not mixing, their personal finances with operating finances, of an organization. But I think there's a different nuance, when you start talking about SMEs in India, and like I said, we'll just come to that. But before that, I want to understand the underwriting process, Now, typically what happens is, when you talk of corporate credit cards, so anything to do with services, in a typical banking relationship, that is essentially backed by some sort of, say, a fixed deposit relationship, or certain, salary accounts, or certain other sort of, CDs, many other banking instruments, in a typical traditional banking system, And a credit card is essentially issued at the back of all of this, and it's an extremely archaic, difficult process, It takes forever, and that's possibly also the reason not a lot of people have, kind of, picked up on such, products, What's your underwriting process? I mean, given that you are, there is a definitive speed that you're bringing to the entire scheme of things. I mean, you're fast tracking the entire process, What is your underwriting process, that you deploy? How do you ensure that this company is the right fit, when you're actually going on to doing this, I mean, give me a sense of that, in terms of how is that model built?
Sure. So it's actually modeled very similar to what Silicon Valley Bank does, which is what they would. So let's say with the startups, we will look at who are the investors of this company. What kind of model are they operating? What's the timing of this era for the business model? We'll also look at their financial status. We'll look at their cash balance. We'll look at are they profitable, or how fast are they growing, so on and so forth. So I would say it's a combination of all these factors that we have to consider when it comes to underwriting for these companies.
Very interesting. That's an interesting point that you highlight, but tell me this, and what I'm particularly interested to understand, is that banks take a lot more time, there is a certain relationship that they have, they have a little more clarity in terms of how the finances are spread out, right? And when you talk of Indian businesses, right, especially SMEs, MSMEs, SMBs, right, if I can put it that way, right, to a certain extent, even corporates, right, there's a huge overlap, like I said, right? You're not necessarily very clear in terms of numbers, right? And that's a huge concern for, I think, anybody in the lending space, right? How do you factor that in? Or is there a certain assumption that you have at a larger level saying that, X amount of loans is what we're kind of deploying. There is going to be a certain delinquency that you factor in a model level. And then, of course, you set it off against the profitability that you have, right? Is that the mechanics of the game that you do? Or and I understand, right? Like I said, this is a difficult market, right? The models become clear over a period of time. So which is the piece which helps you balance it?
Right. So precisely because it's such a difficult market,
right,
and a difficult task to underwrite,
Mm-hmm.
we do it more from a bottoms up approach rather than a tops down approach, as
Right.
as you alluded to. We're quite different from the banks in the sense that I think banks are able to earn quite a bit
Right.
from the enterprises that have security, collateral, fixed deposit, and are their prime customers, right? So I think oftentimes when it comes to the smaller companies, especially
Mhm.
startups, which are known to be risky,
Right.
they simply take the approach or the stance of not taking any risk,
Right.
of asking company or startups to put in fixed deposits and then they extend a credit line, which essentially means there's no underwriting required.
Right.
You simply need to require them to put the money in first. But oftentimes it's actually quite difficult for startups to do this because they do need this capital to be growing a business,
Right.
And optimizing the working capital, right?
Mhm.
So how we look at this is really like from bottoms up. I mean,
Right.
at each company, we will
Mhm.
evaluate the current situation. What does the media like yourself say about them? What are their books like currently? And I don't think it's a perfect formula. It is a risk model that we plug in different parameters, and we
Right.
try our best. We try our best to underwrite them. But we want to grow with them because we realize that and we were entrepreneurs ourselves.
Right.
And when we think to ourselves that, hey, I have $1 million sitting in my bank. I
Right.
know I'm not depositing with you guys, but it's there, and I can show you that I have money there.
Right.
Why can't I get a line for 10, 20K just to spend?
Interesting.
And that's the kind of thinking we're coming from. More like
Right.
we're more concerned about how can we work with you as best as
Right.
we can, rather than using assumption that you're probably going to default. And
Right.
that's a very different approach how we take this.
Right. Interesting. I think I kind of agree with what you're saying, right? I think startups in general, and I think the founders are very driven, right?
Right.
And I think they come with a certain ethos and ethic, right? I think integrity is something which is a constant, right? I think across founders in India, and I think even outside, right? I think the larger aspiration is to create stakeholder value, right? But I think the complexity starts to increase when you start looking at the next level, right, of growth, right? Which is where traditional businesses start to step in, and I think that's complicated area, not just say in India, but I think that's a phenomenon across the globe, right? Because there are certain traditional practices, they're set in certain ways, right? Shibu, my next essentially question is around COVID, right? And I think COVID has been a very unreal time, right? Because I think each one of us, at a personal level and a professional level, right? But I think one thing that it's done, right, is it's complicated the market in many ways, right? Right. One thing that I particularly feel, right, is very significant, right? A risk that has come into the economy is the risk of very quick consumption and fads fading out, right? What that essentially means is that businesses are not going to have the kind of life cycle that they did, right? So, for example, a 3, 4, 5 years product life cycle that we could have seen is not going to be there anymore, right? It's going to become far more dynamic, right? That's number one. Number two, sectors are getting institutionalized, right? So there was an arbitrage, a transitional arbitrage that you could sort of see between sectors, right? A lot of that is getting institutionalized, right? That essentially means that the nature of underwriting is going to be very, very different, right? It'll have to be far more dynamic. Do you think it becomes important for a company like yourself, right, which is in a very early stage, right, which is solving a very important problem? This is got to be a critical integration, right, to adjust risk models for a post-COVID environment, right? Especially in India, like I said, right, which is transitioning very, very quickly, right?
Right.
Do you think the risk models are going to change from here on?
Right. First of all, I want to say that I think COVID definitely has this impact
Sure.
on many aspects, right?
Right.
But there are some that are more positive than others. And I would say that we're quite fortunate that COVID is actually increasing adoption of our product because it is easier to apply for a card through us than with the traditional bank. We're quite grateful that this is the case, and that's really I think the trend and the direction was definitely toward digitalization and having everything to be applied online, right? So that's for sure. But I do believe that COVID did accelerate that pace significantly. Now, in terms of the risk model, and I kind of want to go back to your previous point about startups versus SMEs, right? I think in general, the risk model is a reflection of a few things. Number one, how quickly do you want to grow versus how much risk do you want to expose yourself to? So you can grow very quickly, but expose you to high risk. If you can grow quick enough, maybe you can cover the risk, maybe, right? Maybe not, and you might just topple over and end there. That's one factor. The other one is really how comfortable are you with that particular vertical you're working with, say startups or say garment factories or certain industries, right? So the more comfortable you are, naturally you would be more willing to provide more credit, test it out there. For those that you're not so comfortable with, you may start with a debit card or some of a very low credit limit, just to get them going and learn about their appetite, learn about their characteristics, learn about their metrics, so on and so forth. And then once you get comfortable with them, then you can extend more as well. So I'd say there are all kinds of different approaches you can take to building a risk model. Now, to the point about during COVID or post-COVID, I think the situation will not change too much post-COVID versus now. I think it is more about the philosophy of your company in terms of how quickly you want to grow versus the risk you want to expose yourself to. Number two, how comfortable are you with the companies you're working with, and are you willing to extend a credit line to them? And there will always be like experiments where let's try a few customers there in this vertical and see how it goes. And the worst case is that it will not be favorable, but then not to go there, right? Then we have to think about the ones that do make sense. But I do think that this is it's going to be an ongoing process where you have to keep on optimizing for different cases that happens. For instance, pre-COVID, you would look at certain, say, travel companies differently than during COVID. And so when COVID hits, then that's the time you got to be ready to think, how do you adjust for that? So on and so forth, right? So definitely you affect certain verticals more than others. But yeah, I think overall it's not about the necessary instances or the situation you're in. It's more about the philosophies of how you want to approach the entire risk model and the entire risk exposure for a company. I think that's what matters.
Interesting. People, I know it's not an easy answer, right, to put out, and I think it's a marathon, right? I mean, India is a complicated market, and generally, I think there's no one answer that sort of works for, I think, each of the subsets, right? So I'm not gonna push you in that, right? But I would love to know a little more about the numbers, right? Like you mentioned, right? There's a phenomenal growth that you've seen, and I think there's definitely a movement that we've seen, right, towards digital adoption, right, and digital products. How's been the phase, right? I mean, given that you just started in 2019, right? You were right at the cusp of this entire event unfolding, right? But how's been the growth, right? How's been the excitement, enthusiasm around adoption of the product?
Yeah, I think the growth is definitely been beyond our imagination. Every month, every year, our team and our company is all quite surprised. We always do a reflection of, okay, what was the number we set for the year? And we always ended up exceeding that by multiple times. And then we ask you, so we ask each person, what do you think is going to be the goal for next year? And everyone sets a rather conservative goal. we would break that mid-year and kind of like surprise everyone And I think it's really the market that we're in that there's just a very pent up degree appetite for a product like this, because you understand that this is a product where we provide credit to companies, that helps them with working capital. We don't ask for fixed deposits. We don't ask for personal guarantees. And the entire thing is free. We don't charge any fees to try the product. We don't charge them any interest expense. So it's a bit of a no-brainer to have a product like this helping you to grow your business. And so I think the value proposition that we're offering is just so starkly different from what the banks are offering. That's why I think the customers have been able to really realize that and really spend everything through us.
Right. Interesting. People, well, of course, we've continued to talk of the card, right? And I think that's the larger positioning that I think everybody, that's a perception that everybody has about you, right? But I think when when for example, we read about Carbon Card, right? When you start looking at, say, your website and other information which is available, right? What we realize is that there is a much larger corporate banking aspiration that you have, right? I think you really call yourself a corporate banking partner, right? And essentially, a non-complicated, a corporate banking partner, right? Tell me a little more about that. I mean, is that the larger aspiration? Starting from cards, eventually moving into everything corporate banking for, say, startups for now, and eventually SMBs, right? What's that? I mean, what's the priority right now?
Yeah, it's a great question, and I think honestly, this is probably the number one question all entrepreneurs need to think about. And it is not what you want to do, but actually what you don't want to do.
Right.
Because if you think about the various, let's just talk about corporate banking. There's remittance, there's fixed deposits, there's wealth management, there's corporate card, there's lending, there's payments, there's you name it, right? Now, I think our goal is really to start focusing on with the corporate card, and we've already moved new payments, helping our customers make payments to their vendors and employees that they don't accept credit cards, right? So these are the two products that we've seen a lot of our customers adopt and really just love. Yes, we do have more products that we want to launch. But allow me to leave that till when it's launched and give our customers a bit of surprise. But yeah, I think we are going to launch more and more products that help our customers with corporate banking experiences.
Sure, and I look forward to those conversations that we're going to have with you, right? As soon as you launch those new products. People, I'd love to understand your current current construct, right? So you're essentially a fintech, right? And you're the front-facing player, right? Who's essentially out there acquiring customers, right? You've of course kind of redesigned, reshaped the process, right? But how is this? Give me a sense of the entire construct, right? Who's your banking partner at the back, right? How does the relationship work out? If you could help me understand the mechanics better, that'll be very interesting.
Sure. So we work with SBM. It's a bank that helps us issue corporate co-branded cards, basically. And so they will handle and we and them ensure that all the KYC and onboarding, everything is compliant with what RBI requires. So they help us tremendously on that front.
Right.
And like you said, we are the customer-facing front, where we do everything from speaking to customers, making sure their problems are solved, building a product that solves their pain points, and that includes different products like that we were describing earlier. Right? So essentially, it's more like you think about this as there's the infrastructure play, where the banks and let's say Visa they will take care of. Meaning that we don't need to be speaking to merchants to ensure that they collect credit cards. All that infrastructure is kind of built up, and we simply integrate with them, and that can be done. What our responsibilities are really working with the customers, making sure that we know what they want and building something that they need. Based on the infrastructure that we've been plugged into. So that's really the symbiotic relationship here, in that all players benefit as we are able to grow, because the volume increases and we're able to leverage on that as well.
Right.
And this honestly is really a reason why fintech has been exploding in the past few years. Is
Right.
because imagine 10 years ago, who would be able to work with a bank to issue a card?
Right.
No one, right?
Right.
And that is why the bank have such dominant positions
Right.
in the past. Of course, they still do, right?
Right.
I think that's starting to open up,
Mhm.
with players that help you to issue cards,
Right.
help you to access different banking services,
Mhm.
so on and so forth, right? So I think this is really I call it the first inning,
Right.
the fintech era, and I think it's still a long way to go.
Very interesting. People, one thing when you're talking about credit cards, right? I mean, and lending, I think overall, right? I think one big problem is, that of delinquencies, right? And I think we've seen a lot of that. I think,
Right.
credit cards typically has not had a great history, right? Right. And a lot of larger banks have actually exited that as business, right? Because, one, of course, while deployment is easy, right?
Right.
Typically what becomes a problem is recoveries, right? It becomes a huge problem, right? In a
Right.
construct like this, right? How is this? I mean, what's the construct in your relationship, right?
Mhm.
Is this sitting on your books? Is this sitting on the partner's books? What is that relationship? My sense is that the underwriting essentially is happening at your end, right?
Mhm. Yep.
Right. I mean, you're the one who's really sort of evaluating the potential of that account, right?
Yep.
With its pluses and minuses, right?
Yep.
Uh, where does the delinquency sit, right? What is the recovery mechanism, right? And India is fairly difficult when it comes to recovery, right?
Mhm.
How does that relationship play out?
Right. So on the first part, so we do the underwriting.
Sure.
Therefore, if there is any delinquency, naturally will fall on our books.
Hmm.
And that is one reason why
Sure.
our bank partners willing to work with us.
Right.
Otherwise, it wouldn't make sense for them, right?
Right.
So I think that's perfectly natural, and
Uh-huh.
that's really our competence as well. In that our team has a lot of experience lending to companies in India.
Right.
And so when we underwrite them for the credit card
Right.
line, we're able to I think properly underwrite these
Right.
customers. Now, in terms of let's say collection, so we're not like a lending company, which, as you
Right.
understand, typically have hundreds of people in the call center calling
Right.
people to pay back. We
Right.
have we have just a few people,
Right.
one person maximum, that's working with the customers to pay us back. Because frankly, we are not targeting those people, those companies that are in desperate need of credit.
Right.
For those ones, there's very high risk that they will take their credit, they'll spend,
Right.
and pay back. So we're quite selective in the customers we reach out to,
Right.
and we are aligned with them um, in the sense that we know they want to pay us back,
Right.
because you understand that economically they're not paying any interest, they're not paying
Mhm.
any fees,
Right.
so they want to pay us back if they can,
Right.
right? So we are looking for those high quality customers that we know have a strong intention and strong ability to
Right.
pay us back. So I think it's more about, again, the philosophy of who you reach out to.
Right.
The 40 million companies that are out there, we're probably tapping into less than half a million. That's it, less than half a million of all
Right.
the. So we're quite selective with our customers, and I think this is the right way to start. And going forward, as we become more familiar with the various verticals,
Right.
we will extend ourselves to other businesses and verticals, and see how we can work together. Right.
Right.
But I think we would take one step and see how it goes, and then see if it's ready for us to take more steps there.
People, I love the fact that you're extremely patient with, with when you're dealing with this, this complexity, right? And I think it's heartening to see that, right? Because it is a market which requires that kind of patience, right? But tell me this, right? What happens to your CAC to LTV? I mean, which is a standard metric, right? I think any investor would look at that, right? Given that you're pretty much doing a lot of things for free, right? You're essentially depending, and of course you've underwritten, right? The underwriting risk essentially is all again on your books, right? You're not charging for other services that a typical bank would, right?
Right.
You're not really sort of asking them or putting pressure on them, saying that you have other relationships with me, right? Have certain deposits on all of that, right? You're just making it extremely easy, right?
Yep.
What happens to your CAC to LTV, and how are you justifying that, right, internally, externally to your stakeholders, right? Because that's a very standard question, right? I mean, that's something that everybody looks at, right? What happens to that?
CAC, right? The customer acquisition cost.
Yes.
Okay.
To LTV.
Yeah, got it. So how I look at this is that most of our customers are not coming from say the ads, say Facebook, Google. And I think when you think about CAC versus CLV or LTV, it makes a lot more sense when you're acquiring them via these online channels. Then you want to evaluate whether the return from them justifies the cost of getting them. Right? I think for our case, because these are companies that we need to reach out to, they have to go through multiple layers of internal approval. We actually just have a team of let's say 5 people that reach out to customers and make sure that they understand our product. So I think it's a very different. I would say it's not so direct in terms of the calculation part of what's a CAC per customer, what's a CLV per customer when you acquire them via your own team, right? Your own retail team. And I think this is something that we're quite proud of, in the sense that we are able to speak to the customers and really get them to onboard quite quickly. So I think the number about CAC and CLV is not that I don't
no, I understand.
But it's more that I don't think it applies as well here, given it's not entirely digital.
Right. No, I particularly like, there's this one feature that is there, right? When I read about you, right, there's this one particular piece that is one feature that you talk about, right, is 1% cashback, right? Now that's a very interesting piece, right? And I think in an environment like that, I think incentivizing somebody to spend, right? I think, of course, is now has to be factored in as part of your CAC, right? But I think that's something which will start to reflect, and you're right? At scale, I think currently you're in an environment where you're actually acquiring it piece by piece, right? So there's little clarity as far as that bit is concerned. Before I'm going to move into a slightly larger discussion, right? And that's going to be more about SMEs, MSMEs, right? SMBs, right? Eventually, you will have to step into that territory, right? Right now, a lot of what you're doing is essentially calibrated towards startups, right? And that's a natural go-to because, like you'd mentioned, right? Alluded to that you understand that, because you've been in the investment side of things, right? But as soon as you start to get into the SMB space, right, it is a very, very complicated space. And I understand where you're coming from, that there is a choice that you're making, right? But eventually there is an aspiration, right? I'm sure you would have as a founder, and your stakeholders would have, right, to crack into the larger accounts, right? And like you mentioned, right, there's a very large opportunity out there, right? How are you calibrating or preparing yourself for that, entering that market, right? Because that's going to require a very different kind of, aware with a skill set, right? An ability to deal with the complexities there, right? Is there a preparation that is happening right now? Is that still something which you are, kind of not sure in terms of how exactly it's going to look like? Is that preparation happening? Where are you on that front, right? How will the SMB market look like when engagement for Karbon Cards in next 2.5 years?
Sure. So I'll split this into 2 parts. First, talk about what's similar between SMEs and startups,
right?
And then I'll talk about what's different and how we deal with that.
Sure.
So what's similar is that the pain points of what the SMEs experience from working with the banks and getting a card is quite similar. They are also underserved in the sense that just like startups, really, because banks don't quite understand how to work with them. So I think the pain points are similar,
right?
And I think what's different is really the characteristics of how to operate. Startups they get funding from investors, so we can speak to investors. We understand these investors and so on and so forth, right? So we can evaluate these startups from that angle. Most of the SMEs do not need or do not get funding from investors, right? So they have very different metrics. So for that, we would look deeper into, and they're usually revenue making or profit generating, unlike a lot of startups, right? So for that, we would have to look at their revenue, look at their profitability, look at their current ratio, so on and so forth. Plus, again, going back to the point I raised earlier, is really our comfort level with that particular, say, vertical. And there are many verticals on the SMEs. There's some that make sense, some don't make sense for us. For those one that make sense, we have to get comfortable with it and figure out what are the metrics that really matter in this particular space. So let's say if you're talking to a logistics company, perhaps it is a number of fleets that they have, or let's say miles per gallon, so on and so forth. You gotta understand those key metrics for that particular company. That can really tell you what is the healthiness of this company or this industry as a whole. So once you understand that particular, let's say, metric, you track that, and then as you get more samples and more customers in that particular vertical, then you're able to build your risk model based on that. So again, I think it goes back to our own comfort level and understanding of the space. Yeah.
Interesting. Pei-fu, a very obvious question, right? And I think a lot of people would love to know more, about this, right? Is your selection into Y Combinator, right? And I think typically an Indian company getting selected into Y Combinator is a talk of the town, right? Because I think it's Y Combinator has established that that position for itself, right? And there is a very different kind of a validation that comes in, right? And clearly they're operating in a very a large developed market, right? And I think that's a very good indication for a lot of innovation which is happening in developing market, right? Because you have a parallel, right? You have very clear adoption trends and stuff like that, right? So tell us a little more about that. That's an important feat, right? That you've achieved in your journey, right? Tell us a little more about the experience, right? How has it been? What's been the learning, right? And how has it shaped you to say, look at the market better, possibly prepare your teams better, right? For a very difficult environment that we've been talking about.
Right.
Tell us a little more about that.
Yeah, it's been a pretty thrilling, I would say, 3 to 4 months being in the YC program. I think the number one value that we have from them is the perspectives they have on this model. Let's say the corporate card model, be it in US, Europe, or Latin, and having access to investors and entrepreneurs in these markets that are building similar model in their markets. And once you understand the pain points of each market and the respective solutions they provide to that market, then you would think about, now, does that make sense for India? Obviously, some don't, but there are some that actually apply and it can be used. So for instance, most of the corporate card players in Europe, they don't care about credits because the companies there get a lot of credit from the banks. But they care about expense management because they don't have the access to great expense management, and they all need a tool for that. So that's kind of their angle there. And there are different. I think there are a lot of very different nuances and interesting pain points these entrepreneurs they themselves went through in their countries. So hearing what they've done and kind of digesting it internally and thinking about what would make sense in India, I think is extremely valuable, because I think how we shape our company going forward, a lot of it will depend on what we learn from them. So that's one thing that I really appreciated from this program. I think the other one would be really access to just more investors in US and in Europe who are looking at similar models in their countries. And they are all quite excited about the opportunities that India has to bring, especially with more than 20 unicorns minted already, and more to come, So I think a lot of investors are quite excited about India. So yeah, I think overall the experience has been quite thrilling and meeting a lot of like-minded people, and just learning a great deal of insights from them.
Very interesting. Pei-fu, I'm towards the end of the conversation, right? I think one thing that I like to have with each founder, right, is their thesis on building the right team, right? And I think right now what we are in and where we are, especially in the fintech space, right, is in hyper competitive phase, right? I think the talent is still kind of picking up, right? We still like I think something that we've been discussing, right, all throughout last 40-45 minutes, right, is that this is a market which is still unfolding, right? There are certain trends that are of course very clear. There are certain pieces that have gotten established, right? But then there are still possibilities. I mean, India has been a massively underserved market, right? Talent becomes a little bit of an issue, right? What are some of those things that you are possibly doing, right, with of course your other co-founders, right, to get the talent in place, right? Because when you scale, I think the only constant is going to be your team, right? Thus, it becomes important to identify the right people, nurture the right talent, so that you can build a larger enterprise on that foundation, right? What's the thesis around that?
Right. I think it's the two words that I really worship when it comes
Right,
to talent is really it's not necessarily the quality or the intelligence, but it's more about the talent density.
right,
Or can a group of people kind of elevate one another?
right,
Now you may have someone who is extremely talented
right,
or well accomplished, but they may expect a lot, or they may have a different way of working with different
right,
people, and they
right,
actually dilute the
uh-huh,
entire team,
right,
given that their aspirations may not be
hmm,
as aligned. So I believe that to build a world-class team,
right,
you have to make sure that talent density is at the right level. You don't want
right,
people who are way up here, people who are not up there, and then kind of trying to battle it out or anything like that.
right,
We want people who are very intently focused
right,
on the right direction. That's number one.
uh-huh,
Two, in terms of ability and competence, so on and so forth,
right,
they're not too far from one another, and they're able to elevate one another, and they're
right,
growing that. And I think that I'm very fortunate that I have a very dense and committed co-founding team and core team members and all team members in the company, in the sense
right,
that we're all quite aligned in a direction, and I can see everyone growing. I can see
right,
everyone how they were, let's say, performing in the first month or first week versus
right,
say 3 months or 3 weeks later. You can
hmm,
see that they are picking up. You can see that they are more confident. You can see
right,
that they're more comfortable, and they're speaking up and they're sharing their views and kind of
hmm,
tackling problems that I cannot come up with,
right,
basically, right? And so I think when those signs are right, and when the team are put in that place, it doesn't really matter that much about the talents, as we traditionally know it. It's
right,
more about can that individual be at his or her best in our team, and do we have a system
right,
internally that lets them that their talents be shine through. So I
right.
think a lot of it is I put it on ourselves, on
Interesting.
being able to build a system for the talents.
Right.
Then, of course, we want people who are aligned, who
Hmm.
are talented, to join us.
Right.
Then it works together. Otherwise,
Interesting.
no, it is. Otherwise, there are just so many horror stories where extremely talented
Right.
people just don't find passion or are not excited about what they do. Is
Right.
because the alignment, or because of the chemistry, or because of the system that operate in, are simply not to the best interest.
Right.
So that's how I see about talent, and I do think that there is definitely a talent shortage,
Right.
but I actually put it more onto ourselves to build a system to accommodate and train all talents that come to our company.
Very interesting. Pei-fu, second last question, right? What are the next 2 years like? What is keeping you awake? What is keeping your team awake, right? Uh, what are the next 2 years like? I mean, you've alluded to it, right? But
Right.
would love to, I'm sure there are clear milestones that you set for yourself. Broadly, what are the next 2 years like?
Right. I think overall, the next couple of years
Hmm.
will be very exciting,
Right.
because the more we are in this business,
Right.
um, I wouldn't say what keeps us awake at night, but more like what excites us to wake up in the
Sure.
morning
Right.
is when we hear our customers talk about the value they're really
Right.
seeing from our product, and they're thanking us profusely, and they're telling their friends about
Right.
us. I think that gets us excited to wake
Right.
up every morning, because you're building a product that's meaningful and,
Right.
and people love. So that's definitely something that I don't think will just be for the next 2 years, but for many years to come. I think in terms of milestones, it's and like a startup, right? It's you set a goal, you either exceed it by a lot, or certain parts that just don't hit there because things change, right?
Right.
COVID comes, this happens, that happens. So I think the goal is I would say less of a priority
Right.
than the value that we can create. So as long as we are creating the most value that we can at any moment in time, then we know we're going down the right direction.
Very interesting. Before my last question, right? You spend a lot of time in India, right? But you come from a different
Yes.
country, right? That has had its own set of advantages, right, and disadvantages, right?
Yeah.
I think one thing which is extremely important, right, is that when you're coming from a distance, right, your ability to understand and visualize a market is much sharper, right? And and it's as a team, you can then prioritize and reprioritize. I think you're able to cut it better, right? And a lot of founders essentially find it complicated, right? Because there are certain biases that are already built into the system, right? You've been part of a certain economy in a certain way, right? There are behavioral patterns that are a part of you. It's usually difficult, right? What will be your advice to founders in terms of balancing that, right? In terms of getting away, taking a step back, analyzing and understanding the market, right? How do you think that can be done right? And why am I asking you this is because you're in a unique position to do that, right? And I think that is something which is going to be very beneficial for many founders which are out there, right? What will that be, right? In terms of how can they sort of build that process, institutionalize that process within themselves, so that they are energized, focused on achieving those very clear targets without any biases, right, that they could have.
Right. I think you saved the best question for last. Really, I think it's something that I myself are still trying to refine and improve. But I think a small advice would be to give yourself some room and space, and put down what you're doing, and spend time thinking,
Right.
and imagining what could be possible.
Right.
Because there's this book by Alex Ferguson, I think it's called Leading, where he says that when he's on the pitch,
right,
when the whistle is in his mouth and he's seeing the footworks of all the athletes, then all he thinks about is actually whistling and beeping. Right. That's all he sees about what's what. But then he lets his assistants do that, and he's in the sidelines. He sees the whole picture. He sees the players' family issues. He sees the coach assistants issues. He sees these things. That he's able to then imagine why are things the way they are, and how things should be, so on and so forth. And he's only able to do that because he doesn't have that whistle in his mouth, and he's not on the pitch himself. So I think it is of utmost importance that founders and any leader for any company take that time off to imagine and think about things that are not so immediate, but what could be, right? And I think that kind of inspiration hopefully can give each person a bit more idea about what to do and what not to do. Because it sounds simple, but it's very hard because there's so many temptations, so many threats, so many challenges, so many opportunities that you kind of want to grab everything, but you also don't want to touch too many pointless things too, right? So I think it's it requires a lot of I would say mental energy and ability to not get yourself too engaged in certain things, but then yourself, like you said perfectly well, like how do you take a step back and just pause, think where you are, And I think that's another thing that we're able to do with YC is because we're able to speak to people that have done something similar. And when you ask the right questions and they ask you the right questions, you're able to bounce ideas off. And I think magic happens when you first hear great inspirations like that.
Interesting.
Yeah.
Interesting. Pei-fu, loved every bit of this conversation, right? Thank you so much for for taking the time out, right? It was lovely having you with us, right? Thank you for breaking it down. I think a bunch of things that are extremely clear, right, with this conversation is one, of course, is an exciting market that you're dealing with, right? But simultaneously, the fact that India is a complicated market prioritizing becomes very, very important. And I think simultaneously, it's not a sprint; it's a marathon, right? Cutting for a market which operates at so many layers, you need to be patient, right? You will not have answers at one go. And I think I love that, that patience, like I said, right? That you are sort of looking at this market with, right? And it's an interesting market, right? It's a market which is only maturing. It's a market which is, I think COVID has kind of fast tracked a lot of those things, for the market. I think founders today, promoters, entrepreneurs are waking up to the possibility of building digital solutions, right? Imbibing digital solutions within their own framework, right? The timing couldn't have been better, right? I would have loved to. I would have loved to discuss the Bharat possibility with you, which is essentially tier 2 and tier 3 India, right? But I think I'm going to save that for the next time, right? Our next conversation.
Sure.
It was a pleasure to have you with us. Thank you so much
Thank you so much, Ashu. Okay, thank you for your time and great questions. Thank you.